Palantir Technologies is crushing the stock market right now, and if your portfolio isn't riding this wave, you're probably wondering why. Let's cut straight to it. Palantir stock has skyrocketed nearly 700% in 2024 and almost doubled again in 2025 so far, leaving most other stocks in the dust. Why? It's all about their ironclad grip on AI and data analytics, powering everything from government spy ops to corporate efficiency hacks. But hold on, we're just getting started. Stick around as we break down their origins, products, and why they're printing money while others stall. First up, the basics. Palantir was born in 2003, founded by Peter Thiel and Alex Karp, with a mission to fight terrorism using smart data tools without trampling on rights. They started by helping US intelligence agencies spot threats, turning messy data into clear insights. Fast forward, and they're not just a government sidekick anymore, they've exploded into commercial spaces, making them a dual-threat powerhouse. That's key to their outperformance, stable government cash plus booming private sector growth. But stay with me. Next, we'll go over how their tech actually works and why it's so addictive for clients. At the heart of Palantir's success are their platforms. Gotham for the heavy-duty government stuff, Foundry for businesses, Apollo for smooth deployments, and AIP for cutting-edge AI. Gotham is the beast that helps agencies like the CIA, NSA, and Department of Defense track terrorists, plan missions, and even run drone ops in real time. It's built with top-tier security, like access controls that lock down sensitive info. Foundry, on the flip side, is the commercial star, letting companies like Airbus cut flight delays or Ferrari tweak racing data for wins. It creates a digital twin of operations, so businesses can simulate scenarios and automate without a hitch. Apollo keeps everything updated across clouds or on-site setups, and AIP lets users build AI apps on private networks, keeping data safe from leaks. This lineup isn't just tools, it's a full ecosystem that locks in customers for years. Why does that matter for stocks? Because once a client integrates, switching costs are sky high. Think massive disruption and expense. That stickiness means predictable revenue, which Wall Street loves. But we're not done. Up next, let's talk money. How Palantir's revenues are exploding and why they're profitable when many AI plays are bleeding cash. Financially, Palantir is on fire. In the first quarter of 2025, total revenue hit $884 million, up 39% year over year. US revenue alone surged 55% to $628 million, with commercial jumping 71% and government up 45%. That's not a fluke. In the fourth quarter of 2024, they posted $828 million in revenue, up 36%. They're GAAP profitable too. First quarter 2025 net income was $214 million, with earnings per share at 8 cents. Adjusted, it's even better, 39% operating margins. Cash flow? $310 million from operations in that quarter, and they've got $5.4 billion in cash reserves. This isn't hype, it's real profits fueling the stock surge. Compare that to your average tech stock struggling with losses, and you see why Palantir outperforms. Their Rule of 40 score? 83% in first quarter 2025, meaning killer growth plus margins. But keep listening. I'm about to explain the drivers behind this, starting with AI mania. The big secret sauce? AI adoption is skyrocketing, and Palantir is perfectly positioned. Governments and companies are desperate for AI that actually works in the real world, not just chatbots. Palantir's AIP platform lets clients deploy large language models securely, building AI agents that automate decisions. In government, Gotham AI helps spot cyber threats or disinformation fast. Commercially, Foundry powers simulations for supply chains or healthcare research, like Merck breaking down data silos for cancer studies. Partnerships amp this up. Take their deal with Accenture to train 1,000 pros on Palantir tech for federal agencies, speeding up AI rollouts. This isn't future talk, it's happening now, driving that 71% US commercial revenue spike. Investors see Palantir as the AI infrastructure king, essential for anyone serious about data-driven ops. That's why the stock's up so much. It's not speculative, it's backed by contracts worth billions. Hang tight though, we'll dive into their customer base next, from spy agencies to Fortune 500 firms and why that's a moat no one can breach. Palantir's customers are a who's who of power players, split between government and commercial. On the government side, they started with the CIA and expanded to the FBI, NSA, military branches, and even NATO allies. Use cases? Tracking human traffickers, busting financial crimes, or aiding disaster relief with the UN World Food Program. During the COVID crisis, they helped track vaccines and spot fraud in stimulus funds. Their software is one of only 5 cleared for top-secret national security systems by the Defense Department. But it's not all smooth. Controversies arise, especially with ICE contracts for tracking migrants. Critics say it enables family separations and racial profiling, sparking protests and employee exits. Supporters argue it's about enforcing laws efficiently, but others worry about civil rights overreach, especially under administrations that ramped up deportations like during the Trump years, where policies led to mass raids and separations that many saw as inhumane. Different views exist. Some see it it as necessary security, while ethicists push for more oversight to prevent bias. This ties into broader debates on tech in policing, where Palantir's tools have been linked to predictive systems that disproportionately target minorities. Despite that, government revenue is rock solid, up 45% in US segments. Now, shifting gears, let's hit the commercial side, where growth is even wilder and less controversial. Commercially, Palantir has pivoted hard, and it's paying off big time. US commercial revenue hit a $1 billion annual run rate in first quarter 2025, up 71%. Clients include banks using it to detect fraud, manufacturers like Airbus optimizing flights, and pharma giants like Merck accelerating research. Ferrari fine-tunes car performance data, even consumer brands gauge satisfaction to tweak products. The strategy? Send engineers on-site to integrate fast, creating that true partnership where Palantir becomes indispensable. Total contract value in US commercial? $810 million in first quarter, up 183%. Remaining deal value? $2.32 billion. That's future revenue locked in. Globally, it's mixed. US is 62% of sales, UK 10%, rest of world 28%. International growth lags at 3% in some quarters, especially Europe, but US momentum covers it. This diversification from government dependency is huge stable defense bucks, plus high growth commercial equals a stock that outperforms in any market. But don't stop here. Up ahead, we'll unpack the stock analysis, from sky-high valuations to analyst wars, and why some say it's a bubble while others predict a $1 trillion cap. Stock-wise, Palantir trades on the NYSE as PLTR with a market cap around $335 billion. Shares have exploded, but valuation is the hot debate. Price to earnings? 238 times forward earnings, way above industry averages. Price to sales? 24.17, also premium. Price to book is 14.9, a bit lower, hinting at asset value. Analysts are split. Out of 25 covering it in July 2025, 4 say buy, 15 hold, 6 sell. Average price target is 23% below current levels, with RBC Capital warning of a plunge. They fret over growth slowing to 36% projected for 2025, down from recent quarters. But bulls like Wedbush's Dan Ives call it the Messi of AI, eyeing a $1 trillion market cap in 2 to 3 years. Why? Optionality. Palantir's tech opens new markets, like equity stakes in partners such as Sorfair Mobility, tying their success together. Retail investors are driving gains, while institutions hesitate on price. Still, with 39% revenue growth and profits, it's outperforming peers losing money on AI bets. Risks? High valuation means any miss could tank it. Ethical issues could scare talent or regulators. Think bills on algorithmic bias hitting contracts. Government ties risk political shifts. If policies change, contracts might dry up. Talent drain from controversies is real. Some engineers bail over moral qualms, preferring firms with stronger responsible AI stances like IBM or Microsoft. International stagnation could cap growth too. Competition is fierce, with lower ROE and EBITDA versus some rivals. But Palantir's moat sticky contracts, AI leadership keeps it ahead. Whew, that's the core, but we're far from done. Let's expand on their history and mission to see how it all ties back to outperformance. Rewind to Palantir's genesis post 9/11, the need for better intel tools was urgent. Thiel, fresh from PayPal, teamed with Karp to build software that merges data without needing coders. Mission? Augment human smarts? Protect liberty via tech. They emphasize user-friendly interfaces, no SQL or stats required. But tensions exist. While they claim privacy protections, applications like ICE tracking have drawn fire from groups like Amnesty International for enabling raids and separations. During the Trump administration, these tools were central to aggressive immigration enforcement, which critics blasted as cruel and divisive, leading to court blocks and protests. On the flip side, defenders say it's about border security and efficiency, highlighting a divide in opinions on tech's role in policy. Palantir faced internal revolts too, with resignations over ethics. This could hurt hiring top AI talent, who might opt for less controversial firms. Yet, operationally, it hasn't slowed them. Government revenue keeps climbing. Their business model thrives on long-term deals, embedding engineers to deliver quick wins. This creates high switching costs, like a digital twin that's hard to rip out. It's why hedge funds love them, predictable cash from sticky clients. And speaking of clients, let's zoom in on specifics to show why this setup crushes competitors. Take government examples. The Maven Smart system, used by over 20,000 military users and NATO, analyzes drone imagery for battlefield intel. Titan, their AI hardware for troops, scored big contracts, marking hardware entry. Civilian side? CDC fraud detection in recovery acts. Controversial? Yes, like predictive policing raising bias concerns. Some say it perpetuates racial inequities, while proponents argue it saves lives by focusing resources. Different perspectives. Ethicists demand audits, law enforcement praises results. Commercially, it's cleaner financial firms spot insider threats via email and GPS analysis. Supply chains get optimized, healthcare silos vanish. Growth here is explosive because AI is everywhere now, and Palantir's ready-made. Their boot camps, like training sessions for AIP, hook new users fast. In 2024, US commercial customers grew 55%. Deals? 139 over 1 million in first quarter 2025, 51 over 5 million, 31 over 10 million. That's volume driving outperformance. But to keep you hooked, Net will contrast Palantir with lookalikes and why they're not the same. Don't confuse Palantir Technologies with Palantir.net. That's a Chicago web firm doing Drupal stuff, totally unrelated. The real Palantir is Denver-based, focused on big data AI. This mix-up happens, but we're talking PLTR, the stock star. Why does it outperform? Unlike pure AI plays like chat-focused firms, Palantir delivers enterprise-grade, secure solutions with proven ROI. Their free cash flow, $370 million adjusted in first quarter, is real, not vaporware. Peers burn cash, Palantir generates it. Valuation critics say it's overpriced, but with adjusted EPS at 13 cents and margins at 44%, it's justified if growth holds. Analysts like Ives see trillion-dollar potential from AI optionality, new apps in autonomous vehicles or smart cities. Skeptics like Brent Thiel at Jefferies say even 50% annual growth wouldn't make it cheap by 2030. Fair points on both sides, bulls bet on AI boom, bears on meme reversion. Retail frenzy helps, but fundamentals shine, customer count up 39% year over year. Risks like regulatory hits from bias laws could sting, especially if tied to past admin policies that amplified controversies. Trump-era ICE expansions fueled backlash, with judges halting deportations enabled by such tech. Today, it's about balancing innovation with ethics. Palantir claims built-in protections, but critics want more transparency. This debate keeps things spicy, but doesn't derail growth yet. Let's get deeper into financials for retention. Projected 2025 revenue growth at 36% might seem slow, but it's from a higher base, and US acceleration suggests upside. Free cash flow margins? 42% in first quarter. That's efficiency letting them invest without dilution. Cash pile of $5.4 billion means acquisitions or buybacks possible. Compared to S&P averages, Palantir's return is outsized because AI tailwinds are structural. Global AI spend is exploding, and Palantir's in the sweet spot. Their operating system for data integrates everything, unlike siloed competitors. Apollo ensures updates without downtime. AIP adds Gen AI securely. Clients build custom agents. Think automating procurement or threat detection. This versatility is why deals are huge. Record TCV shows commitment. For stocks, this means less volatility from lumpy sales, revenue is smoother. But ethical risks loom, talent wars are real. Palantir's rep could push engineers to Google or OpenAI, who tout ethical AI. Yet, their engineer on-site model builds loyalty. International fix? They're pushing, but Europe lags due to regs like GDPR. Success there could double growth. Analysts split, some see stagnation, others expansion goldmine. Expanding on products, Gotham's audit logs ensure compliance, vital for GovWork. Foundry's ontology layer is game-changing. Digital twins let simulations predict outcomes, like supply disruptions. AIP controls LLMs privately, dodging public cloud risks. Together, it's a fortress. Use case humanitarian aid allocating resources in disasters via data fusion, or finance unraveling crimes like Ponzi schemes. This breadth outperforms narrow AI stocks. Stock history from IPO at $10 in 2020 to over $100 now. 2024 surge tied to AI hype post ChatGPT. 2025 continued beats. Q2 2025 previews suggest more records. But valuation pressure? PEG at 4.18 screams expensive. Defenders say growth justifies it. 5-year projections high. Critics, if growth dips to 20%, crash incoming. Opinions vary. Ives bullish on infrastructure role, Thiel bearish on comps. Institutional ownership? Moderate, but rising with performance. Retail? All in, driving momentum. Risk deep dive, high valuation means earnings misses hurt, expect volatility. Ethical scrutiny, amnesty reports highlight ICE tools in raids, leading to family harms. Under Trump, policies maximize this, drawing ire from human rights groups who saw it as targeting vulnerable migrants without due process. The counterview is it's law enforcement tech, neutral, with users being responsible. But lawsuits mount, like challenges to algorithmic decisions. Regulatory, bills for bias transparency could mandate changes, hitting revenue. Dependency, government is 40%-ish of revenue, policy shifts like post-election could cut. Diversification helps, commercial now rivals it. Talent, resignations over morals, per reports, could slow innovation. International, 3% growth versus US 55% signals need for strategy tweak. Competition versus Snowflake or Databricks, Palantir's security edge wins Gove, but commercial fights harder. Strengths, high RO40, profits. Weaknesses, lower ROE than peers. Why outperform? Combo of defense stability and commercial rocket fuel. AI is the engine. As adoption hits production, Palantir is embedded. Future, more hardware like Titan equity plays. Prediction, if they nail international and ethics, $1 trillion market cap is possible. But watch for bubbles.